just multiply by multiply by 10, right? But since every employee is to be paid according to 1500, so we will not consider this one and we will not consider this one, so we'll replace it with 1500, right? And since this is above 1500, right, so we'll not consider 1500, we will use the greater number 2300. So what is the per hour rate is 10, so it means the workers are paid 15,000 in April, 23,000 in May, 15,000 in June. That's how our direct labor budget is made. So here I have pasted a very quick check. Just pause the video and try to solve it by yourself. I'm just going to read the question. What would be the total labor cost for the quarter if the company follows no layoff policy and pays $15 for every hour work in excess of 15,000? It means company gonna be, so I think in May company worked 2300, so it means 1500 will be multiplied with 10, another 800, not 800, it's gonna be, yes, 800 multiplied by 15. This is how we calculated. I think we have pasted the solution here. Here it is, right? So because this is less than 15, so we consider 15. So there is no overtime here and there is also no overtime here. Only overtime here is 800. So we just multiply this with, because why there is 1500, because we consider 1500 here, 1500 here, 1500 here, the total 4500. 800 is overtime, so 800 multiplied by 15 here, this is, and normal 4500 multiplied by 3 months according to 1500 policy. So total labor cost would be 57,000. And now our learning objective 6 is prepare manufacturing overhead budget. So let's explore this. So assume that at Royal Company, manufacturing overhead is applied to units of product on the basis of direct labor hours. So this is very important. So the variable manufacturing overhead rate is 20 per direct labor hours. Fixed manufacturing overhead is 50,000 per month, which include 20,000 non-cash, primarily the depreciation of the plant. So let's make our or prepare our manufacturing overhead budget. So making our manufacturing overhead budget, and our budget is based on direct labor hours. So that policy of 1500 at minimum 1500 payment is not applicable because it is based on actual direct labor hours, because we are now making or preparing a budgeted statement for manufacturing overhead, right? So in April, direct labor hours needed 13,000, 1300, 2300, 1450, and we know that the variable overhead is 20. So you just multiply this with 20 and your answer is 26,000, 46,000, 29,000. So this is the quarter total variable overhead. So fixed is given. So we are now making our manufacturing overhead budget. So so that policy of paying 1500 direct labor hours minimum wages is not applicable here, because we are already made direct labor cost budget, but this is manufacturing overhead cost budget, right? So we know that in April 1300 hours are used, May 2300, June 1450. So variable is 20, so answer is here, but fixed is 50,000, right? So you add it, you find out that the total manufacturing overhead for the April is 76,000, May 96,000, and June 79,000. So total overhead is 251,000 and total on the basis of 5,050. So since it is plant wide or only uh, one rate is applied here, it means we are using average or plant wide or absorption costing type stuff here. So total cost is 251,000, total units 50. Answer is 49.70 per hour. And now, in order to calculate how much actually cash we have paid for our manufacturing overhead, since among this fixed manufacturing overhead there is 20,000 that belongs to depreciation, in which so depreciation is basically a non-cash expense, non-cash charge, which we do not pay from our pocket, so it is not included in our cash payment, so we less here from here. So the actual cash payments for manufacturing overhead, we just less 20,000, so answer is 191,000. So remember, when we calculated the per unit manufacturing overhead, we do include the depreciation cost in our manufacturing overhead, because depreciation is a part of manufacturing overhead. So the Royal Company now can complete the ending finished goods inventory budget. So the first step in preparing the budget to compute the direct material cost per unit, and we know that each unit requires 5 pounds of material, and cost is 0.0, so total is 2. And also we know that the direct labor is 1 unit require 0.05 hours, and the cost is $10, so the answer is 0.5. And manufacturing overhead, we know that is based on direct labor hours, so direct labor hours 0.05 multiplied by the per unit cost is 49.70, answer is 2.49. so hence our total manufacturing cost is 4.99. so here we can say that so now we will discuss the cost of finished goods inventory. So we know that from our production budget that our ending inventory going to be 5,000. So 5,000 multiplied by our total manufacturing cost is 4.99. So this is going to be our ending inventory cost. So that's going to be our balance sheet item, because on balance sheet inventory is written with the cost of 24,950.